aspects such as objective and another one about the constraint. After that, we look for the asset allocation and portfolio management process. We study for two important theories. The first one about the modern portfolio theories and extend to what we study for capital market theory with CAPM model. We also discuss some strategy that we can apply to manage the equity portfolio. After that, we learn how to evaluate the portfolio performance. Previous week, we discussed about the technical analysis. And we have two lectures that you can use and that can help you to build a strategy. The first one, we discussed about the efficiency of the market. And based on the efficiency of the capital market, there is some implications for you to apply to manage a portfolio. And here, this is Joe content. And first of all, have a look. This is the process for the portfolio management. At the beginning, like you remember that, okay, we have the investment policy assessment. And after that, you will analyze, investigate the current financial and economic condition. Based on that, you focus what you should invest in your portfolio, is right? In your robo assignment as well. And we learn how to construct the optimal portfolio theoretically and technically. For theoretical, in theory, we discuss about the portfolio theory, capital market theory, and we understand the reason why we do that. In terms of technique, we have 2 workshop days and we learn how to construct the optimal portfolio in Solver, in Excel. And the last one, we learn how to evaluate the portfolio performance. Okay, and all you will do in your report, for the final report, and you do presentation. Here, have a look. I would like to discuss with you the approach we studied today. So you want me to review from the beginning. So we discuss again, but of course, quickly and faster, or we just pick some important points and you pick those points and tell me. So we discuss together. Which one you refer? I mean, just before, I just summarize quickly what we have already studied during that course. And today, we have a review session. Actually, we will, we won't have class for next 2 weeks. The first one, you can enjoy in the Christmas day, and another one at the end of the day. So, we have no class. You can enjoy the life. After that, we reserve 2 class for the reserve week. On that day, we will have the whole day to do presentation. Okay. And for today, I would like to discuss with you the way that we review, because we just review all we have already studied. As a result, it's better if you are more active, dynamic. So think about this, the way, which one you refer? You refer that I will review from the beginning at the end with some important points, or you refer that's okay, just tell me whatever, as any point, as any lecture you want me to discuss again, I will do. So please tell me. Which one? Review in details. Okay. For other, what you want? For other. Okay, details. Okay, So it means that I will review in detail for each lesson, but it means that it's very, very boring. It's okay? Ready for that? Very boring. It will review from the beginning with the detailed information. That's okay. Now, the first one. Very good question here. For the final, we have the all content from the beginning. Actually, for the exam, we will start from this point. I have a look. Here. Yes, I have already recorded the lecture. Now, for the final exam, we will start cover from there for the final exam. It means I will ask you the strategy you may apply in the Vietnamese stock exchange, for example. And you need to know how to evaluate the portfolio performance. Also, based on the capital market efficiency, please tell me some implications that you can apply in the Vietnamese stock exchange. And for technical analysis, like I mentioned before, you have one question that accounts for 10 points, which links related to technical analysis. But I refer that you do by yourself at home. It means you will go to the website, to any stock that you like, as any peers that you are interested in, and look at the charts. Try to observe, do you see any pattern? Or you may look for the moving average, etc., whatever. You discuss on that, and you may have some prediction, or you may suggest investors to do, like you say, should wait or should buy, and some estimation. Okay. And for this one, actually, I don't criticize that you are right or wrong in terms of predictions. What's more and more important, I would like to apply the knowledge in practice. So that's why one question here, linked to technical analysis. You do at home and you print out the paper, submit to me in the final exam. For the final exam here, we will cover after the midterm. It means that from portfolio, okay, management strategy. Is it okay? Sure, everyone is okay? For the final exam, someone asked me about the final exam. So now, please, whenever you hear my question, just please give me the answer, whatever, to make sure that's okay. You are listening to me, and to make sure that the internet quality is good. You can hear and you can listen to my question. Is it okay? Do you have any suggestion? You can tell me. Any suggestion? And I will post in the blackboard for the final exam. First of all, no. I would like to give the answer to writer, is right? No. For the final exam, we don't focus on technical analysis. Technical analysis is just one essay question that account for 10%. You do technical analysis individually. Okay, I give the first question first. For the technical analysis, first of all, it just accounts for 10%. Okay, and you do individually. Individually, very simple. Go to the website, choose any stocks that you like. You can choose any periods that you are interested on that, and you grow the graph. Okay, look at and observe and discuss. You can discuss whatever you like. offline knowledge you study as much as possible. Right? You look at about the pattern, supporting or resistance level, look at about the trading volume, for example, or relative strength index. It means that I don't criticize about right or wrong, but more and more important, I would like you to apply what you study as much as possible. Practice. That's the structure of the final exam. Okay. We have, sorry, that I did not, here. Sorry that I don't know why, but the slide for the final exam disappeared. So now I will write down. First of all, we have MCQ question. It may account for 40 points. It's covered from this topic. Okay. Stock portfolio management strategy, performance as well. The second one, we have, let me think, for essay question. One, I would like to ask you about the strategy. You may employ in the Vietnamese stock exchange. The second one, I would like to ask you about based on the different types of the market and the different level of efficiency, do you suggest any strategy that can help you to earn abnormal return? Also the strategy, but here, more and more here for implication. I can write just here. Not really about the strategy, but it's linked to the market's hypothesis. To the next one, market efficiency. This one here. At the different times of the market efficiency, please think about that, can we earn abnormal return or not? And if we want to earn abnormal return, which strategy should we employ? Number three, I would like to ask you, and you will evaluate the portfolio performance that I gave you. And number four, about the technical analysis. And for the technical analysis, you do at home, okay? And print the paper and submit to me in the final exam. Yeah, this is the structure for final exam. Is okay? For essay question will account for 30 points. MCQ account for 40 points. And among for essay questions, we will have 4 essay questions here. The first one, like I said before, think about this. Which strategy you want to apply in Vietnamese stock exchange if you invest. The second one, we discuss about the market efficiency. The third one, I will ask you to evaluate the portfolio that I gave you. The third one, about the technical analysis. For technical analysis, you do at home. You are totally free to apply knowledge you study in terms of technical analysis and submit to me. Yeah. Yes, the content for the MCQ question, again, is cover the lecture after CAPM module. I remember lecture 6, from the lecture 6. Is it clear to everyone? For MCQ questions, again, I also ask you among those content, but just in a different format for the MCQ questions. And for technical analysis, you do individually, okay? Because this one for the final exam. Any suggestion, any questions so far before we review the lecture? Any question, any suggestion? And this is the closed book exam, and you bring nothing in the exam, closed book. You are not allowed to take note, no? And again, for the strategy here, when I ask you about the strategy you apply in Vietnamese stock exchange, again, there is no right or wrong answer. I just focus on the explanation, the reason why you want to do like this. And I do not criticize this is right or wrong, but I just focus on the reasonable, okay? The reasonable explanation.
Sorry, teachers, I have a question related to the technical analysis. So, what is the requirement for marking in the final exam in this part, and how to conduct a technical analysis assessment as a part of the final exam? Yeah, can you explain more this part for me, please?
First of all, there is no specific requirement, okay? You choose whatever you like at any stock. Go to that one, like just think about that in practice. You don't have try to choose the stock that provides you the pattern. No, just pick anything and based on the real situation like this. Think about that. Do you see anything, any trend, any moving average that provides you some useful information? Any pattern that you can observe? You may can say nothing because it's in practice, reality. And that's why I really want you to observe what you work. And when you pick the real situation, I do not ask you that try to observe those stuff like that, the pattern like the head and shoulder, double top, whatever. Absolutely no. Just you based on that and try to apply knowledge. You study as much as possible. That's all. This is the main purpose why I refer you to do by yourself at home rather than I pick those stock, one stock with some certain pattern and I force you to observe. Absolutely not. Because why? For some students, they may invest in the short term, so the window they observe just 3 months. But for other students, they may want to invest for the long-term investment, for example. So the window they refer to observe for 1 year. This is your choice, okay? And you just apply and show that here. This is what you can apply for the specific situation. Is it clear? Is it clear or not? Excuse me? Did I answer your question?
Yeah, thank you for your answering my questions. Yeah, I clear in this part.
Don't worry about the requirement. Okay, don't worry about the requirement because why? Only one thing that you try your best and you apply what you study. That's all. Exactly. On you can do whatever you want. Any stock you may are interested in Vinamilk, pick Vinamilk stock. You may are interested in FPT, pick that one. And you may refer to observe for 1 year. So choose the chart with 1 year. You may want to observe only for within most recent 3 months. For example, pick that one. And think about that based on what we learned. What do you think? you may say that, oh, this is the time for us to buy or to sell, or we need to wait, or for this one, not so clear signals, whatever you can discuss. Yeah, I will. To high in suggestion, yes, I will. So that's why you see, I do not ask you about the theory definition, but here, actually, you have already known all I will ask you in the final exam. And why I refer you to that? Because I would like you to apply knowledge in practice. Think about that and find the reason if you do what you want to do. Okay? This is the primary purpose for this course, not about the exam. So that's why here, the strategy again, some people, they may refer to invest in short term, and just please provide me the reason why you think and why you refer the short term rather than long term. For example, some students, they may want to invest passively or actively, whatever you like, in Vietnamese stock trend. The reason, just I focus on the reason. I do not criticize about the short term or long term, passive or active strategy, but I just refer to look at about the reason that convince you, compels you to do that. Okay? So even though this is the closed book exam, but actually it's open already now. Now you have already known here 1, 2, and 3 as a question already. For this one, I will provide you some portfolio and you evaluate it. Any question? Sure, everyone? Any questions? So just ask me. Okay, if now you have no questions, I will actually ask you the question. Now, you want me to review from the beginning, or you pick the topics and I review? Which one you refer? You review from the beginning, or you choose the topic? So that's why I think the smart student who asked me the first question about the final exam, you forced me to give the answer. Yeah. Okay, so here. Okay, from lecture 6. Okay, I will focus from lecture 6, but before to do that, we will go quickly from the beginning. Is that right? Okay, I agree. I agree with you. I will turn on that we go from the beginning, and after that we focus on the topic. Now here, this is the general picture when you construct the optimal portfolio. Okay. First of all, like we mentioned before, we need to determine what you want, and what you want is reflects in the objective. Is right? What you want, and another one, what you have to do or what you don't have. That's why we look at about the constraints. Okay. And after set up the objectives of your investment and the strategy as well, we will investigate, analyze the current financial and economic condition. Why we have to do that? Because we invest today to receive money in the future. So we have to forecast in the future what we expect something happen. So we have to forecast and to make decision. But to forecast, we need to base on the current financial and economic condition. For example, at the moment, we have to forecast a world economic outlook next year. So we have to base on those happening at the moment. Is right. Suppose now in the recent days, we receive many good news related to the vaccine for COVID-19. So that means we, based on what is happening at the moment, to estimate what will happen in the future. And for your assignment, you do by yourself. However, I didn't receive any requirement to make with me. I didn't receive any appointment that you contact me to discuss about this step. Like I mentioned before, for the second step, I could not teach you, is right, but I refer you to do by yourself. However, please discuss with me at any points you want. Here, we will discuss. And case by case, suppose you may choose some industry you are interested in, bring that one and we discuss together. We analyze what is happening at the moment and we forecast for the future. Okay, this is for second step. For the third step, we will learn how to construct the optimal portfolio, and we learn from the, in terms of theory, yes, we'll look at about the portfolio theory. And we also look at about the CAPM for your assignment. I do not ask you to invest in risk-free investment, so that's why we don't conduct this one. But in the workshop, we learn how to put the risk-free and to grow the straight line. Okay. We also have 2 days for the workshop to use the solver. And at the end, we learn how to evaluate. When you evaluate the portfolio performance, remember for me, if you remember that, now, I want to ask you, if you earn 20% rate of return for your portfolio, are you happy? If you earn the rate of return at 20%, yes, you're happy, it's right, exactly. Now, this is your portfolio. And for the market, if at that time, the market generates at 50% rate of return, are you happy? Are you happy now? No. Is it right? Exactly. No. And again, in case that you lose 20%, are you sad? Are you sad if you lose 20%? Very sad. It's right. Yeah, exactly. And for last period, markets lose around 50%. Now, how did you feel? Still sad, but as it's better. I totally agree with you. It's right. That's why we evaluate the portfolio performance, but we not just simply look at the return. Absolutely not enough. Is right. We need to consider about the risk as well. How we face. If we take so risky investment and we earn a little bit return, it's not good. And also we need to look at about the market benchmark. That is frankly why you have already learned those methods and you use it. Also for your portfolio, when you lose money, don't feel sad, okay? You need to look at the VN index at that time and you need to apply, for example, trainer shaft, particularly very important for the chain stand method. You run regression compared with the market to consider, is it good or not? That's why we have no term about the over or under performs. And over or under actually relative to benchmark. Okay, So that's why when you earn and you lose money, of course, we are so sad. But in terms of return, we cannot say that this portfolio is under or outperform, just simply based on the return. That's why we have to evaluate. We use the risk, we take into account about the risk as well, and we also compare with a benchmark. And the benchmark for this case, for your assignment here, is VN index, because we invest all money in Ho Chi Minh Stock Exchange. And this is the general portfolio management process for 4 steps. And all steps are important as equally. Okay, all are important. There is no the most important thing. All are important, like we discussed before. Here, for the objective, just again, if you remember that I asked you before, that some investment that can help you to earn the return, which is equal to 300% rate of return. So you want to invest? Do you want to invest? If someone gives you the option to invest and you can earn the return, which is 300% rate of return, do you want to invest? To everyone? Exactly. Depends on risk. That's why you see, for objective or to make decision to invest, always we consider. Sure, I totally agree with you. We have to consider about the risk and return, of course, but the return is totally not enough. Like I asked you before, you still say you have to think, you have to consider about the level of risk you take. Exactly. Because to earn 300% rate of return, many things they can do, that's right, and something even though illegal. As a result, we think about the risk. That's set up for you objective. The objective is include risk and return. And again, for risk, it's just about that you like or you don't like risk. No, but more and more important, it's about the tolerance. The tolerance, ability to take risk. Like we can move to see here. We focus on ability to take risk. If you remember, during the life cycle, we have some the different phase, and with the different phase, we have the different level of risk we can expose. For example, here you see, I show you, that's why I show you here, not just about the like or don't like, but we also consider all the aspects and determine about the tolerance to take risk. Like you see, we can classify the life cycles in 4 phases. The first one, remunerates before 25 years old, and in the accumulation phase. Accumulation phase is come from 25 years old to 45 years old. And you see, for this one, people actually, they can take risks. They can take risks, but they cannot invest in so risky investment. The reason why? Because of financial position for this phase. For this phase, they just start developing career, and the salaries they earn not really high compared with what they spend, living spend. So the saving, the surplus, not much. And also they have many important things they have to do, like they have to pay down for the house, the car, and tuition fee for their children. That's why even though for this phase, yes, they really want to take risk and more money, but we have to focus on financial position to educate them that they can take risk, but not mean extremely high. Okay, and now We also see about in the spending or gifting phase. It means that in this phase, people, they don't have to worry so much about their life, right? Because they have already accumulated the capital a lot. But for this case, about the health, their health does not allow them to take so risky investment. And you, in the future, if you were fund manager, this is your job. You have to educate your clients about the level of risk they should take. For some people, if they can take the risky investment, but they don't like, you also need to educate them, to explain to them that's okay, they can do that to improve their wealth. And here, it is some example for you to see here. For example, this one, even though people, they like to take risk and they want to increase their wealth as quickly as possible, but we need to look at in general about the financial position. Maybe they not allow them to take the risk investment. Another stage here, even though now they have much capital, okay, and much savings, and they don't have to spend so much for their life. However, another aspect about the health does not allow them to take risky investment. And here, for this case, for this one, yes, you can take a little bit high risky investment to improve the wealth and also increase the capital. That's why we explain that in IPS, think about the objective with the risk. But again, risk just simply focus on high, you like or you don't like risk, okay? But more and more important about the tolerance to take risk. And here, preliminary risk means when you are very young. If you remember the statement I asked you to discuss, should young people invest all their money in risky investment? We have already discussed and analyzed this, right? For this stage, yes, they don't have much wealth, but here they got many chance to earn money later. And also for this stage, they are not under pressure for finance, for living expense. So that's why they can take risky investment for this phase as well. Okay. And because today we review, so that's why I refer we don't go step by step, but it's better if any point we can go further and any point we can go back like this one. Okay. So we discussed about the risk tolerance, and you apply this one in the life cycle of your clients. You educate them and think about that, the wealth, the family situation, the financial position. And another aspect about the return, of course, whenever we invest, we want to earn the return. And for the return, think about this. You have two ways to set up the objective. One, with the absolute value, like you can set up that, okay, you want to earn the return at 20%, or you want to earn the return at 50% per year. And this is for absolute value, absolute return you set up. However, actually in practice, they do not set up so specific return like this one, because why? It's really hard to fulfill and really hard to estimate the specific number. Is it better if they follow the market and they set up in general? That's what you see here. In general, they have the capital preservation, capital appreciation, current income, or the total return. For the capital preservation, it means investors, they try to protect the real value of money. When time passes, the inflation depreciates people money value. That's why when they invest, actually the main purpose is they just want to keep pace with inflation. So we have the capital preservation. And for that, very, very like a, not, I don't say simple, but it means that low target return like this. You should build the strategy and invest in less risky investment. In the opposite side, you may set up another objective which is called capital appreciation. It means it's focused for long term, and investors they try to increase the wealth as much as possible and for long term, so they can have the patient capital. For the patient capital mean they may don't require to have a return in the recent years and they can wait. So that's why based on that, and why we need to analyze the return, because it affects the strategies you invest based on the objective. Based on what you want, you will find a strategy that can help you to fulfill the objectives. And here, if you want to build a portfolio that have the objectives, which is capital appreciation, mean increase much. And to increase more money, of course, we have to invest in risky investment. That's it. For current, when we look at about the current income, mean, okay, we want to have income periodically. It's affect the strategy. So think about that, find the investment that bring the income periodically to you. You may think about the bond when you receive the coupon payment. You may think about the stock that pay high dividend for you. Okay? For the total returns mean it's similar to capital appreciation and similar to current income, but the current income here, they don't spend to sponsor for their life, but they will use that to reinvest. That's what we call for the total return. Whenever you invest, sit down, think about the objectives, what you want in terms of return. And based on that, think about the ability to take risks. They are very important because you also need to build the strategy from the beginning when you invest. Okay? And down here, we see it's affect the strategy. For the constraints, we focus on liquidity needs, of course. Sometimes you invest for long term, 30 years, 20 years. However, in some special point in time, we need cash. We need cash. And the cash means we have to convert the assets into cash. We have to convert stocks into cash. That's why we think about the liquidity needs during the investment horizon. At any time, we need. So based on that, it's the, yes, of course, it do not affect the strategy in the whole, but here, it will suggest you the strategy here. For some strategy you apply here, it means that the way you choose stock, so that at that point in time, you got some cash to fulfill your needs. This is for investment, so this is for liquidity needs. And here, the whole here for investment horizon, what we call time horizon. The time horizon is longer, larger, and this one surely will influence the strategy you choose. For example, similarly, if you choose to invest in long term, you have more freedom to choose those stocks with those strategy. But if your time investment horizon just a little bit shorter, of course, you cannot invest in those stocks that take time to grow. Is right? And here, why we still need to consider about the liquidity needs, because some point in time here we need quite huge amount of money. That's why we need to set up a strategy. Have you okay, even though you got 30 years to invest, however, after 10 years you need some money. That's explained to you why. Think about the liquidity as well. We have to choose and to combine those stocks. Okay, we can wait for more than 10 years, but those stocks we cannot wait. We have to sell to get cash. We have to convert those stocks into cash. As a result, think about the type of stock you want to invest, of course, for investment horizon. But among that, we have some shorter periods, and we also consider on that. So you may classify your fund in many types of stock. Those stocks, okay, should leave that to earn money for more than 10 years. But on the other hand, we also need to include in the portfolio for those stocks that help you to fulfill this one. Here for tax, legal concern, I do not discuss so much because you know already, uniqueness as well. For the uniqueness, mean some investor, they don't like some specific industry, so they don't want to invest. That's all. And for you, as a fund manager, you have to follow that. And here, the important content for the investment policy statement. Here we have another important step which is called asset allocation. I remember for me, in the asset allocation, you should think about the asset classes. Don't think about the specific stocks. No, absolutely no. Here, because you will adjust and you will update investment policy statement periodically, not so frequently. And anything change, anything derived from IPS, you have to update. You have to discuss with your clients. So if you include specific stocks in IPS, whenever you sell stock, you have to discuss with your clients. You have to come up with arrangement. However, as you are fund managers, so you should make your job and bring back to clients in case you want to change the asset allocation. You want to change the strategy. For example, from the beginning, you discuss with the clients and agree that you will invest passively. Now, in case that you estimate and you think how market fluctuates so quickly, if you want to change the strategy, you are not allowed to do by yourself. You need to get agreement with your client first, and after that, you go. Similarly, from the beginning, you have already told the clients that, okay, you invest 60% in stock, 40% in bond. Now, you see about the gold price so fluctuate and you see the chance to earn money. However, you are not allowed to do that. Whenever you want to invest in gold, you have to discuss with your clients and get agreement. You will adjust the asset allocation, like 30% for stocks, 30% for gold, and 30% of money and 40% for bonds, for example. That explains to you why anything includes in IPS. Whenever we update, we change, we also need to discuss with the clients because this is set up from the beginning. So that explains to you why in asset allocation, we should provide general information. We don't say in IPS about those stock we choose. Like you can invest in Vinamilk, you can invest in FT, Mobile World. However, if you want to sell, you don't have to discuss. This is for another step, not included in IPS. Like for example, for your fund, if you invest for 30 stocks, now you don't include on this one specific stock because you may sell and buy frequently. You adjust. You just adjust general item periodically. That explains to you why for the asset allocation, we have two items, the asset classes, gold, stock, currency, bond, which one we want to invest, and about the policy weight, how many percentage we will allocate to the assets. Okay. For SPS, and here we have already discussed about the individual investment life cycle. Now, we finished for IPS with some important points. Here, we look at about the theory. one who invests in portfolio for topic 2. Okay, look at this one. You see, from the beginning, when we talk about the investment, we talk about the risk, the return, and the risk is measured in terms of the standard deviation. The standard deviation here reflects for you about the total risk. How to measure it? For example, today the stock price increase, tomorrow continue to increase, and the stock price go down, goes up, go down. The total risk measured by the standard deviation is will capture all volatility of stock. It means, for example, today, nothing changed in the macro factor, the market just stayed. But because the strategy of the company changed and it's makes the price of the company goes up. So that's why you capture this one. In the next day, some macro information released with the good news. So the stock price increase. That's increase here, not from the firm specific, but from the markets. And at that time, the markets also increased. And after that, on the other hand, we still have some additional one come from the firm specific factor. For example, companies, they release about the profit they earn. So you see, for one day, when the stock price movement, it includes two. One come from the macro factors. It's moved together with the markets. And another one is may come from the firm specific factor. And here, the standard deviation will capture all fluctuation, all volatility of the stock price. So it means we say the standard deviation is the measure of total risk. You see, and once you invest in one asset, this is very, very important, the volatility of the stock, because it tells you about the uncertainty for your investment. More uncertainty, risky investment differs. Okay, and the standard deviation again is measured about the stock price movement, the standard deviation, how it's far away from average. Okay, however, like we mentioned before, we rarely invest in one asset. No, we normally invest in many assets. As a result, we have a portfolio, and one we invest in many assets. Suppose here, this is our portfolio, which includes those stocks, and we are considering that kind of stock, that kind of investment. Is it risky or not? We think we don't look at this one solely, but now think about that. If we put that assets in our portfolio, how it contribute to the portfolio risk? It make portfolio risk increase, or it have to reduce the portfolio risk. That's here we consider about the risk of one investment from the portfolio context. Okay, because why? Nowadays we know that we never invest our money in one asset. It's so risky. Okay. And also that explains to you why here we consider the level of risk in terms of portfolio context. And now when we put here, it can have to increase or decrease the portfolio risk. And it depends on what? It depends on the relationship. The relationship between this one with asset E, with asset D, this one. It means now how this asset linked to other assets in the portfolio. For example, here, the gold. Gold is very, very risky investment. You